All right, hey everybody, how's it going? Want to make sure you can hear me okay. It looks like the levels are okay, but I want to make sure. If you can hear me, thank you, Stephen. Okay, good. Okay, so the reason for this discussion is that you probably know, because you look at your email and your push notifications, is that we've been doing a lot of day trading, but not a lot of swing trading. And the swing trading that we've been doing has been, let's just say, not stellar. It's not to say that we're making bad decisions or pushing anything. I think it's a function of the market. And you've heard me over the years say trading and your style of trading needs to evolve with the marketplace. And so trying to do the same thing that worked in 1980, 1990, 2000, 2010, and 2018 are not necessarily the same, other than buying something lower than you sold it for. If you can figure out a methodology that always works, well, then you have something there. But I do know what the power and how cool Vantage Point is because I've used it for years. And by years, I don't mean decades, I mean about 3 years. And I've had it work fantastically. And it's not like it's not working at all. It's just not working as well as I'm used to it. Things has to be, hang on, let me mute this here. One of the things has to be, I'm just going to turn off the notifications for a second so you guys don't. There we go. We shouldn't get those beeps in the background. So one of the two things has to be true. Either VP doesn't work anymore, or I'm not using it to the best of my ability. I'm willing to say that it's the latter and not the former. That it does work. It just doesn't work the same way that it worked in 2016, 17, and so forth. And why is that? Well, because the market, you see that it turns on a dime. How are you supposed to swing trade with this thing when on a given day there's no trend and there's no indication why there would or wouldn't be a trend? So I'm trying to figure out and have been working on how to make this work for day trading, because we've seen even signals that didn't come from VP that are swing trades are tougher. Dex.com, perfect example. Was working really, really well, doing exactly what we thought it was going to do. Found support, rejected that support, took off. We got long. We were kicking butt. And then for some unknown reason, there was no, at least immediate news. It's down 7% on a day. Why? Because the market is just scared in general. So what does that mean? Well, let's just react to what's happening today and not worry about trying to figure out what's going to happen tomorrow, much less in a week or a month. So how best to do that? And one thing that I do notice with Vantage Point is that this gray bar, usually you can see that our layout looks a little bit different today. I just have the bars. We could have high-low close. These are candlesticks. We could use high-low close. It doesn't matter. This just looks a little bit cleaner to me, or at least you can see it better. I know that predictive differences, well, here, we have this line and this line that we normally don't have on our graph. You notice we don't have the predicted crossover or anything like that. Because why? Because, well, it's actually happening in the background. The neural index is indicative. So I want to keep that around, and the predictive differences are indicative. So what we're concerned about is not necessarily what's going to happen in like I said, even next week, much less in a month. we've had our most success day trading. And this is the way that you have to think as a trader. What is working and what isn't? And I remember saying, we probably was in a chat and not talking to Scott directly, if I remember correctly, but I was saying, we're kicking butt day trading. Swing trading kind of blows. He goes, then why are you swing trading? Which is, you would think, well, that's a very obvious answer. Hang on just a second here. I sneezed and did not want to blow your eardrums out. I've been having some allergic reaction that I'm squarely placing on my in-laws and the allergens that they brought in from their dogs that I'm allergic to. But at any rate, so if I sound stuffy or if I have to mute because I'm sneezing, that's because I am. Okay, so we're worried about things on a short-term basis. What's happening now? Is this predictive? And so what I've done is we're looking at three main things. This red line here, this is this high. You're used to seeing this gray bar, which is the predicted high and low. Well, it depends what kind of bears. Chicago bears, I am not allergic to. Regular bears, I've not been close enough to sniff one. So I'm willing to plead. I'm just going to say I just don't know. But anyhow, we're used to seeing this gray bar, which is the predicted high and low. And what this line is a graph of this predicted high over time. I'm using a 1-month chart. This black or dark blue line, whatever your resolution on your screen is this predicted low over that time. We still have the neural index that we're used to. And actually, we got the stacked neural index, which means that a green line is strong, a stacked green line is stronger. Same thing here with it being red is weak, red here is very weak. So, and then the predicted differences are the same. And in this case, I'm worried about the short term more than these are going to be confirming, but this is the one that I want to see that's strong. So I use the same IntelliScan that we did before for short-term trades. This is IntelliScan's all stocks bullish short-term. Same sort of thing. We have the symbol. I'm looking for the neural index trend to be up, which means it's green. I want the short-term, medium, and long-term predictive differences all sloping up. I want the short-term crossover, and I'm concerned about short-term crossovers that happened today, meaning last night into tonight, or into today. Because why? Because we're going to use this for day trading and not swing trading. I see what you're saying. William just said allergic to bear markets. I'm not allergic to bear markets. I haven't seen one in a while. I don't know about you, but I'm not allergic to them. And then the predicted trading range is up, which means today's predicted high and low is yesterday's actual high and low. So that hasn't changed. Same thing with the volume. I want to see 1 million shares. I want the closing price of the stock to be above 20. So that hasn't changed. And I picked out, we're looking at the bullish side first, and we'll go through the bearish side after this. So this gave me, on a day like today, it's filtering 1,059 names, and 45 of them came up meeting this criteria, and I picked a few of them to look at. Okay, so let's get rid of IntelliScan so we can see the rest of our charts. So what I am concerned with is where before when we were looking at longer term swing trades, we certainly concentrated around here, but we also looked at this. I really don't care about this as much. But on a day like today, we know that because of our IntelliScan, that we had a short-term crossover. So that means we had a short-term, that the short-term predicted moving average went above the simple moving average. That gives us an indication that's saying, hey, we have a possible breakout scenario. I was trading through Y2K. William just said he lived through Y2K. I lived through a lot worse than Y2K, trading-wise. So we know that we have a bullish crossover. We know that the neural index is at least green, which means strong. And in fact, today it happened to be very strong. And then the predicted high and low, you can see here, is higher than everybody's high and low from yesterday. And we see all three are positively sloped. And actually, we had a short-term crossover and a medium-term crossover. Long-term crossover hasn't happened yet, but all these things are pointing to strength on today, which is really what I care about. So now on days when we have strong indications here, you can see that in general, if you look at this, these predicted highs and predicted lows are pretty indicative. Are they perfect? Absolutely not. But you can see, like on a day like today, or on this day, we were like, well, Mike, look what the predicted low was. It was all the way up here, and it was, it actually ended up over this. Pardon me for a second again. So it actually did close above the predicted low, but you took a lot of heat. But the thing was, is that we never would have gotten into something like this. Why? Well, we barely got the crossover. Everything else was pretty flat. Maybe you could say that. But the neural index was red. We never would have been in a trade like that. On a day like this day. Okay. Now we had the short-term crossover that occurred. We know that the predicted high and predicted low of the next day was lower. Well, guess what? Look at where it predicted that high. So on days that are bearish, it's very good at predicting the high. And do you care if it predicts the low of a bearish day? That's just more money for you. You probably would have gotten out before that, but still. So on a day like today with Pfizer, we had the crossover. Predicted high is, again, predicted high is higher than yesterday's high and low. We have a very strong trend. And we really don't care. We're looking for what was today's low. So we last night we didn't know what today's low was. Let's move this over here and look at what Pfizer did on a daily basis. So the low of the day, come on, sure. So the low of the day on today, oops, other way. Essentially, the low of the day was, let's not quibble here, but it's about 44.10. Predicted low here was 43.61. So this would have been a day that ideally I would want to put, I want to put an order here. So, and we're not trying to buy the bottom tick, just the same way we're not trying to sell the top tick, but buying something and let's just say the lower quartile. It depends how aggressive that you want to be. Now, on a day like today, we wouldn't have got filled in Pfizer. But we know that if we're getting in here and all the things are pointing up, we don't necessarily have to take a lot of heat. Again, is it perfect? No. But we know that if we get much below this predicted low on a day when it's predicting an up day, we're stopped out shortly before this. So again, the same way that all of our methodologies aren't perfect, we're taking lower and lower risk for potentially higher gains. So that's Pfizer. And to prove my point, I have not gone through most of these. Comcast, tight range predicted. What's going to happen here in Comcast? So this is gonna, and all these are gonna have the same criteria. Here, maybe I should I put the short-term crossover on here so you guys can see? Here's short-term difference. You have to add it, sorry. Predicted short-term crossover. Bring that over in here. Okay, so the short-term crossover actually happened 2 days ago. We can change that in our IntelliScan. We can just say we just want 1 day. But at any rate, on a day like today where everything is looking up, short-term crossover, neural network looking good, predicted high better than predicted low, we're looking to buy something in, at the very least, the lower half, more likely the low of today. What was the low of today in Comcast? CSA. The low of today for the regular session was down at the low about 38.20. 38.20. They predicted the low to be 37.91. So if we bought 30 cents off of the low, which is certainly plausible for us to do, trying to get my, there we go. So if we're buying somewhere in here, we're okay. We get stopped out, we're going to get stopped out a little bit before here. So what this does is this gives us that, we're not going to get filled on all of these, but we can set these alarms and say, hey, listen, if we start when everything is working higher, and now, of course, if the market was down 3%, we're not looking for buys in this situation. We're looking for value. And then, we buy in this range. We know that we're going to stop ourselves out a little bit below here. So here, so now here's a day on a down day. We look at how it on down days it predicts the high much better than it predicts the low. Again, we don't care if it predicts the low very well because we're already short. Here, in bullish cases, it predicts the low better than it predicts the high. We get in here, Comcast happens to be trading 38, 80 something. So it's already above the high. We probably would have sold out here. So this is a very, very good way of, let's go through some more. And like I said, this is probably too late to put any of these on right now. But again, Cisco. Looking on the up days, how well here it never even got, this is probably earnings, but here it never got near the low. So it's not going to get filled every day. But when it does fill out, like, for perhaps on a day like today, or on this day, we probably would have been able to get in there somewhere. We're not that far off the low. Perfect. We had already crossed over. So this is it's just something that I want to start folding in because I've been looking at it. I thought about it for a while. I've been looking at the price action and I've liked it. And then I went to some of the people at VP to tell them my idea and say, hey, listen, this is how I'm thinking about doing this for day trading, because up until now, I really haven't used, remember, we did try and do a beta with VP, and there was, I think, some fundamental things that I was probably not doing correctly, but this is where I kind of formulated this idea, and they love the idea. So we're going to start seeing these, and let me stress this, in the beginning of this, I'm going to say we are going to allocate 1% of the portfolio. Because like anything else, you come up with an idea, you test it out, you beta it out, and then you just don't go full bore into, we're going to allocate 5% of our portfolio to these things. I have no problem allocating 5% to any of our other day trading things that we do, but this one I want to prove to myself. So you can allocate whatever you want. I'm going to allocate smaller, much smaller amounts to these day trades until we get a real idea of what's happening. All right, questions. We can go through some more of these if you don't have questions. So Cognizant, same thing. I want to run this IntelliScan again. Can only use all stocks. All right, these are all one day. They're all 1 days. That's fine. I'm probably going to put the neural index being around pointing up for 2 days as well. We'll put that into that IntelliScan. So Cognizant, everything looking bullish, everything setting up properly. What was the low today in CTSH? Remember, we're not trying to buy the low tick. We're trying to probably buy somewhere in this area. The low today got put in at 69.5. Probably it would have been a close one. We probably would have got filled on that one. Where's it trading now? 70.72. And look at what the predicted high is, 70.62. I'm not saying that we'd be out here. These are moves that we can use. So TSH off. What's Microsoft? Microsoft took off. I don't know that we ever. I don't know if Microsoft traded down today. They were up well over 3%. Up 3% right now. But the low today was just off the open at 10. The low one. Come on, don't move on me. 107.86. 107.86. We would have been in. Well, we probably would only be sitting here 106.21. All right, this looks like this low is lower than that. Oh, 107.80. 107.86. So because it traded up overnight. So we missed that one. But you can see where this is a high value, low risk, potentially high reward way of having another methodology. And when methodologies work, then we use them. All right, so I just wanted to let you know that that was my idea. We're going to ease into this. We're not going to jump in with both feet. I encourage you all to paper trade it before I don't want you to say, well, Mike Shorr told me to do it. I want you to prove to yourself. Okay, if there's no questions, that's my new idea. I think that it's going to be valuable. And on some days there's going to be a lot of opportunities. We're going to have gap fills. We're going to have our normal swing momentum plays, whatever we want to call them. These guys, gap plays, this, and RPM. I think RPM goes kind of hand in hand with this methodology. Very seldomly do they disagree with each other. Sometimes it's harder to pick up the RPMs because the move that gets them on our screen happens later than the first 10 minutes of the day or so. Yeah, I'm recording this, Richard. So that's what I'm looking at. I plan on starting at least having some signals out tomorrow. And we're going to approach it the same way. These are not intended to be held overnight. It works from the bullish side or the bearish side, or at least I intend. Let's take a look at what, if anything popped up on the short-term crossover All stocks bearish short term. I didn't even look at this today. Yeah, we got 9 to look at. Let's see if anything. Well, ETP. I'm just seeing if. Well, we really don't have to really care if there's good option volume, because we'll just. This is for. Let me get rid of these all. So something like Tyson Foods, we can look at. Really, none of these I would be looking at, other maybe Tyson, probably not. Or what? And I mean, yesterday was a day where there's not a whole lot that would trigger to the downside. Why? Because yesterday we was up. We were up. Jeez. All right, so on a day like today, it crossed over. We have the negative crossover here. We have, this is looking low. We would most likely, we would be looking at something to the downside to get short in the 59, 58, 90, 59 range. Let's see what, Tyson probably rallied along with the rest of. Actually, look at it, didn't. On a day like today, what was the high though? The high today was right off the open, which was 58.36. I mean, to say that we would have gotten short at 58.36 is we would not have gotten short here, right? That's at the bottom of the range and it actually went lower. But what's indicative is that it called this even on a day like today. So just the fact that we didn't get filled shouldn't say, well, it doesn't work. It just said never got that high. So if we have, an alert out there to say, hey, listen, if this gets up here, I want to know about it. And then, when that thing jumps out, well, then very, very simple. In this case, we buy an at-the-money put, just the same way that we buy an at-the-money put or at-the-money call if we get a gap fill or if we have a setup like we do here with the swing momentum. Okay, so like I said, this is recorded. It's a 28-minute video, so it's probably going to take a little bit of time to render, but I'll get that file out to you guys, and that is about it. Any questions, let me know. It's brand new. We're going to ease into it, but I'm excited about it because I'm telling you, Vantage Point is a tool that's powerful. You just have to figure out how to use it as a tool. Try to use a hammer as a screwdriver, you're going to be a horrible carpenter, or a screwdriver as a hammer. But given the right thing, it's a very powerful tool. So that is relative price movement. That's one of the methodologies in there. But like I said, we haven't had a whole lot of RPMs that have come up. More so because a lot of them are getting picked up earlier by this. It doesn't mean that RPM doesn't work. Oftentimes it means that the move, which is part of what the methodology is, isn't happening right in the beginning of the day. But there's some day, there's going to be a point in time where that thing's going to work really, really well. Okay. Thank you for listening. Thank you for your time. Let me render this. I'll get this out to you. And hopefully the market wants to make a little bit of a secondary move and we get something that we can work with here and maybe get a few more signals under our belt.